better as a result of social media presence.
If it doesn't do those three things, then it's on the chopping block.
It's a return on investment discussion.
Hey everybody, welcome to another episode of the Daily Dealer Live. I'm your host Sam Dark, and welcome to this gathering place for all automotive, where we learn, share, and grow together 3 times a week. Daily Dealer Live, often imitated, never, ever duplicated. Thanks for choosing to join us here, making this the best community-driven show in all the industry. And let's jump straight into today's industry headlines. First up today, in a CDG exclusive, an internal Wells Fargo memo to dealers obtained by CDG News shows the bank has expanded credit guidelines for dealers in its pilot program. Under the new term, borrowers with FICO scores of at least 540 can be approved with loan-to-value ratios up to 150%. Sweet. While those with scores between 500 and 539 qualify with LTVs up to 110%. In a statement to CDG News, Wells Fargo said it is, quote, committed to responsible lending and providing our customers with affordable solutions for their transportation needs, adding that the bank is continuously testing lending solutions in the market. Big picture here, well, expanding credit access like this isn't unprecedented, and it often gives dealers more tools to close deals for credit-strained buyers who remain critical to sales. And higher LTVs also raise risk levels if economic conditions shift. And as it relates to Wells Fargo, in my own anecdotal experience, haven't seen a lot of them, maybe even since the 08 recession. Would love to learn more about this high LTV program, and lending right now in our marketplace is where it's at. Next up today, direct from the CDG Buy-Sell Tracker. Sutherland Automotive Group has acquired McKenna Subaru in Huntington Beach. This marks its first California location and one of the largest single-point Subaru transactions to date. This, according to Deal Advisor's Pinnacle Mergers and Acquisitions. The deal expands Sutherland's portfolio to 4 stores, and owner Brett Sutherland is relocating to Orange County, beautiful place, to base his office at the new dealership. Sutherland is also pledging to set a new bar for sales volume and customer experience, stating, quote, "We didn't come here to participate, we came here to lead, and we will make this the #1 Subaru dealership in America." Now, from my own self-interested standpoint, we at Ziegler have 4 stores. Competition in automotive makes us all better. So to Brett, game on, let's go. As we compete and try to deliver our best to every Subaru customer, their goal of becoming #1, our goal of becoming #1, that is what makes automotive sweet. Plans for the new location include doubling service capacity, stocking more than 500 vehicles, rolling out customer-first tech, and, best of all, he's creating 75 new jobs with the acquisition. Next up today, fresh off the CDG recall tracker powered by Busy Car, Stellantis is recalling certain Jeep Wagoneer and Grand Wagoneer SUVs in 2 separate campaigns. This for improperly secured exterior trim pieces that can detach and create road hazards, according to federal regulators. By the way, if you're driving in certain cities, you're going to get that anyway. You don't need a recall to have things fall off. But the first recall, covering roughly 163,000 vehicles from 22 to 25, involves door trim that may not have been properly secured at the assembly plant. Uh-oh. The second, covering 123,000 vehicles from 22 to 24, involves quarter window trim that may detach due to a supplier issue. Uh-oh. Dealers will inspect and replace door trim at no charge, of course. But for the quarter window recall, repairs are still in development. Owners will get interim warning letters in November until a final fix is ready. What's the takeaway here? Well, recall work does fill service bays with guaranteed manufacturer reimbursed labor, but rates sometimes fall below what dealership departments could be earning on the retail side, usually unless protected by states. However, that's changing fast. As an example, New Jersey just mandated manufacturers reimburse dealers at retail rates for warranty and recall work, joining states like New York and Illinois. We're in the Chicagoland. Love that. And get this, the law on the books in Illinois has delivered an additional $209 million in compensation to affected service department workers across the state's dealership network. To find out exactly which 9 models are affected by today's announced recall, head over to the CDG Recall Tracker powered by Busy Car at cdgrecalls.com. Yuli, we got all sorts of fun stuff. We got the recall tracker. We got the buy-sell tracker. We even got the NADA tracker. It's fun. Retail My Ride says, hello, guys. Yes, and we have our own jingle, too. All sorts of resources. All right, next up today, Ford CEO Jim Farley is weighing in on the end of federal EV tax credits. By the way, today is day one of post-EV rebate world. That we're going to see what supply does and demand does naturally, if that is possible. Farley told a crowd at the Ford Pro Accelerate Skilled Trades conference that electric vehicle sales could drop by nearly half once these subsidies expire. As Farley put it, quote, customers are not interested in the $75,000 electric vehicle. I wouldn't be surprised if EV sales in the U.S. go down to 5% of our industry from probably this month at 10 or 12%. So he's predicting it slashes by half. For Ford dealers, the lease to buy dealers some time, Farley confirmed Ford will use its financing arm to purchase EV inventory, claim the $7,500 credit, and then lease those vehicles back out with the subsidy backed into the payment, at least for a few more months. By the way, not a totally unique strategy. We're hearing other OEMs thinking about doing that. For Ford dealers, that lease workaround could be a lifeline, helping move EVs that might otherwise sit on lots once the federal incentive disappears. But longer term, Ford is delaying 2 new EV launches while also investing $2 billion in a Kentucky plant to build more affordable electric models. Farley is calling it a Model T moment, betting that family-friendly EVs will keep Ford competitive through a turbulent transition. And that's a wrap on today's industry news. Super interesting. What is going to happen to the EV world? I think it's fascinating to see some of these OEMs. I'm on a couple dealer 20 group chats, including CDG's own exclusive invite-only 20 group text chain. You can DM Yossi for inclusion into that. A lot of conversation yesterday as those subsidies go away, what different OEMs and manufacturers are doing to keep it going. Yuli, welcome back in the co-host chair today. What's up?
Thank you. Happy to be here.
And as always, for our audience joining the live stream, a reminder, we are live across all CDG social media platforms. Please post your comments. We'll bring them into today's show. It changes the trajectory of today's show. Thank you, Retail My Ride, for saying EV was always niche. Correction happening now. And then Elevate 3 says, really appreciate what you guys do. One of the best. Thanks for the props and for the comment. Yuli, we've got a great show. Todd Blue, CEO of LAPIS, is coming on the show today. He's going to answer the question, who's better at connecting with the consumer, Publix or privately held dealer groups? That should be an interesting conversation. And Chris Singleton, managing partner at Mike Terry Auto Group, is going to join talking about KPI, checkup from the neck up, including a little bit about what it means to sell in our new world. And Yuli, do you have your NADA ticket yet? Are you confirmed? Are you in?
I'm confirmed. I'm ready.
Fantastic. I'm going to say I am too, even though I haven't seen the official word yet. But as we know, Car Dealership Guy is back with our second annual NADA party happening in Vegas on Thursday, February 5th. It is the hottest ticket at NADA 2026 with special guests and top automotive personalities. To be considered for a formal invite, hit the link in the show notes below. Request to join, fill out a questionnaire. Spots are limited, unfortunately. We can't invite everyone. So RSVP today. And we hope to see you in Las Vegas. Viva Las Vegas. Vegas is always one of my favorite NADAs. Everybody has a good time in Vegas. And then when you're done on day 3, it's like, all right, I'm going to go back and work because I can't stay here more than 4 days in the row. Unless
propped up on all that oxygen.
Yes, yeah. Oxygen and bang, caffeine-infused bang. So, all right, Yuli, let's turn to our first guest today, CEO of LAPIS, Todd Blue. Welcome to the show.
Hi, guys. How are you?
Hey, Todd.
Doing fantastic. Thanks for being on the show. Hey, before and as we ask you our question, we always ask everyone, how's biz? Tell us how biz is, and then give us a little bit of background on you and your auto group.
Biz is, I think, improving for us slowly every day, every week, every month. I'll go into that. Just grateful to be on your show. I just want to get invited to the party in Vegas and be on the text chain. So
you are in. You are in, and we'll get you into the. I'll reach out to Yossi. We'll get you in on the. Actually, It is fascinating. It's a group of dealers across the country, bigger dealers, and they just share ideas openly. And, like Fight Club, you can't talk about Fight Club. I can't talk about any of the topics on the show, but I draw from it in the experience. And it was a vigorous convo last night about EVs and what on earth do you do with all these EVs sitting around? In fact, Todd, how many EVs do you have left? What do you got on your inventory?
It's interesting. Not many. We're pretty healthy in our EV. We've got a few fabulous electric G-Wagons available, only probably 2. So we're lean and we're ready to go.
Yeah, fantastic. Well, so you answered how's biz with things are good. What's good right now? What are you winning at?
So for me, to answer your question, this is a restart for me. I was in the car business only from January of 2010 until 2020, and I sold a business. Then I had a non-compete, and I've restarted. And my first store back is Mercedes-Benz of Northern Arizona in Flagstaff, Arizona. So it's a great opportunity and honor to represent Mercedes. So for me, I'm new and fresh, almost like operating an open point from the beginning, starting all the way from ground zero. And so my perspective, for better or for worse, is a little different. I didn't get the luxury to operate during COVID in those euphoric times. And so my frame of reference is, 2019 and before, which to me were great years. They look at bad years. I'd look at 1982, 2008, things like that are bad. And as we all talk all the time, there's people in the workforce that don't even know what those years feel like or look like for whatever industry you were in.
Yeah. So as someone who skipped that's interesting, by the way. When did you sell your group?
Sold my group, finally left as CEO. I stayed on for 2 or 3 years, but I left not so coincidentally right in the beginning of kind of in around 2020. So
that's wild.
Literally just sat out exactly those euphoric times of those 2 years.
So here at Ziegler, Todd, Aaron bought a Mercedes-Benz store right as COVID was beginning. He closed on it like it was just right there, 2020 in the winter of. And the first thought was, oh no, right? Because the world was shutting down until we realized we were all essential people. And then as we know, the euphoria of COVID happened. So having missed that, what advice do you give? You've come back in, you kind of missed that bubble. You're seeing where things are right now. What are a couple things that you're doing today, October 1st of 2025, at your Mercedes-Benz store in Flagstaff, Arizona, to win in this marketplace?
Great question. Blocking and tackling can never be underestimated. A lot of good small decisions all the time are critical. Very, very common sense approach. Again, we're not going to be able to control a macroeconomic recession, God forbid, if there is one. Car dealers are strong. They're tough. They're resilient. Those who have experienced up and downs in the auto business or other industries know this is a very cyclical business. So right now, it sounds cliche, but recruiting is everything. The proper people in place in the right seats are everything. Building culture is everything. And I'm excited to start small because it kind of gives you the luxury to create a new, fresh culture and practice with, small little baby steps before you, or I, in my case, take the next step of a large acquisition.
So it's interesting. You had multiple franchises and you sold it. You sat out your non-compete. You came back in. You have the unique vantage point of being able to focus on one store and grow that one store. What's something for our Daily Dealer audience, having gone from a big group to a single point, that surprised you, that you didn't realize, that you're like, hey, you know what, this is kind of cool, or I'm disturbed because I'm at one rooftop now?
Well, you have to manage your ego, or I have to manage my ego. It was fun to always be on the dealer board and walk in and sit at the CEO's table and have a good hotel room. Now I'm in the back of the bus. I'm at the table in the back of the room. And it humbles you, but I'm not going to say I'm Michael Jordan playing for the Birmingham baseball team, or Steve Jobs sitting out of Apple for a few years, because I would never compare myself to them. But it's humbling. But at the same time, it sharpens your skills. You get your swing right. You work on your stance, if it's a sports metaphor, and you can fine tune those things. And that's what I'm trying to do now. And I'm excited about it, again, in a small town, but thank God with a great brand in Mercedes-Benz.
So, Todd, we're going to talk about Publix versus individual points. And this is a great conversation given your background and where you came. But as you come into that single point, and there's humility there, although you're Mercedes-Benz, it's best or nothing. Let's be honest. It's an incredible OEM, right? What's something that most single point operators miss that you saw running a group and getting all that economy of scale that you've been able to leverage running this one Mercedes-Benz store in Flagstaff? Is there one thing that others could take away from in your transition?
Well, I do think we all agree. I mean, it's no secret. Brand and brands are critical. I think they're more and more critical each and every day, especially with, and we're going to talk about EV and all these kind of things, but brand is so critical, and their commitment to dealers and our commitment back to them, the partnership we have from them. When you have a group, I had, I think, 10 or 11 brands before, all luxury. You can, since you're diversified, or you perceive you are by brand, and if Aston Martin's down and Bentley's up, or Porsche's up and BMW is down, or vice versa, it's a nice hedge. With one brand, you're all in, and you're beholden to their decisions. So you better believe in their mission and vision. And I do with Mercedes, and they are fully committed to their dealers. They're incredible. I think they're getting stronger, and they adapt quickly. They've done so with electric. So I think those are the things you pay a lot of attention to.
So you are now, go ahead, Yuli.
No, I was going to say, Todd, so I've heard great things about you. It's great to finally meet you. I know you know Steve from our CDG recruiting. So on the vein of commitment, we know that you have some very realistic and attainable aspirations to grow the dealer group again. How does utilizing something like that, you had mentioned a few minutes back about recruiting, and you got to have the right people on the team. How do you leverage solutions like that to make sure that you have the right people in place and you're growing and going in the right direction?
So for sure, there's no question. CDG recruiting has been great to us. I think, again, goes back to these principles: hire slow, fire fast, and take your time. It is very interesting to see experience and making the decision. Like, hey, do you have Mercedes experience? Do you understand what it's like to live in a small town? In our case. In our business in Flagstaff, you have to mine customers versus our old stores in Houston. When you're in a major metro, you're just competing with other dealers. In our case, you're literally digging for gold and finding customers. And so finding the right people has been critical. And Steve has done an incredible job for us. And we're reliant upon that, because getting yourself on the map in a small town, especially, you're reliant upon people like CDG recruiting and others. And Steve has been great, and I have a great relationship with him. And he's been incredibly helpful in me turning, because we made some mistakes in the beginning, and that's normal. And now we're correcting those, and it's been very helpful.
Awesome.
Yeah. So it's interesting. You are competing against Publix and large groups that are going out and buying, tens, if not hundreds of rooftops. But you believe that you have a big advantage as a single point or someone that has several points. What's the advantage? Like, where do you win in that battle, public or large group versus smaller?
I think community, brand, obviously, manufacturer, it really depends. The Publics they have systems, they have strength, they have incredible scale, and I am not going to try to compete with that or be them, and I think that's okay. I think in our case, I've always been focused on luxury. I'm going to stick to luxury or premium, or premium. I'm not saying that Publix can't do that. I'm just saying that the luxury customer demands, not even expects. They demand connectivity, in many cases directly to ownership. I've never been shy to give my cell phone number to all customers. I love it. I love meeting our customers in that space. And at the same time, I do not think that I probably would be great at some of the brands that Publix shine and excel in, as do, by the way, large.
Such as?
Well, I mean, I don't want to specifically say, but
Come on, name names.
I hope I would be better at Mercedes than I would be at Nissan, as an example. Things like that.
You and everyone else. It is interesting. There are some luxury brands, Ferrari, some super high-end luxury brands that shy away from Publix for all the reasons that you state, right? Your ability to connect and provide a very individualized experience is unique in automotive. What's something you're doing in Flagstaff, Arizona at your Mercedes-Benz store to connect with the customer and create a lifelong relationship that helps you retain that customer out and above large groups, online, Publix, whoever? How are you winning in that space?
Well, our store in Flagstaff is a couple of things. It is locals in a small mountain town. It is college kids at Northern Arizona University. And then it is the second home buyers, which I've experienced before in my previous markets in Rancho Mirage and Palm Springs. So those are three very different kinds of customers, and approaching them and managing them and being available to them is very different. Their demands are different. Their products that they want to buy are different. Their desire for pickup and delivery are different, and their expectations are different. Now, obviously, we're a Sprinter dealer, and that's a whole other wonderful set of customers. And so paying attention to each of their needs is very specific to each one.
How's remote delivery? We talked a lot about that on our last show or not remote delivery, but remote service. In the Benz world, it's a significant initiative. They actually do a lot of OTA update type stuff. What are you doing in the remote service category in a resort town like Flagstaff?
I believe in everything remote delivery, nationwide for that matter, for sure in the state of Arizona, pickup and delivery for selling and buying cars. And then as far as service, I think it is critical. I mean, our closest luxury store, let alone another Mercedes store, is over 100 miles away. So it is critical for us to pay attention to that. Obviously, I've always been a believer that yes is the answer. I mean, just if whatever you say, just say yes and figure it out later. It's been a mandate of ours and of mine in every business I've been in. And so we're going to continue to do that and be available to our customers wherever they are and figure it out later. So say yes and figure it out later.
So having come again, I'm fascinated by the you sold the group, you're now single point. Do you want to grow? Do you want to buy additional points, or is this the one in Flagstaff?
No, I definitely am gonna grow. I don't, and I think it's okay. I don't want to grow for growth's sake in a similar way that Publix do, which again, I know they have to manage Wallstreet, they have to manage shareholders. I respect that wholeheartedly. I think that's good news for privates that want to be something different. I mean, first of all, I want to be in communities where I could add value to the community and the customers that are there. And by the way, who am I? I'm not saying that I'm better or worse than any other private dealer. I'm just saying if I know the community or can connect to the community in a unique or certain way because of relationships or familiarity or the brand, or feel like I could add value, that's where I want to participate. And also, I mean, I don't have to be in the car business. When I very first started in the classic car business, way before I was in the franchise business, I called myself the collector's dealer. So my mind was set from being a collector and what would they want. And so that's how I built my first business. And so in the same way, like, what do these customers want? I mean, I remember sitting on the Porsche dealer board and they were thinking about getting rid of the manual transmission. And I'm like, what are you doing? Like, this sets us aside from everything. And they said, well, we only sell 9 or 10% manuals. I'm like, well, that's because you only make 10% manuals. I'm like, charge more for manual. We can charge more for manual. Yes, you can charge more for manual. So I think getting away from buttons and manual transmissions and things like this are symbolic of what a manufacturer needs to be careful of, in the same way a dealer needs to really plug in. So to answer your question, I want to only be what I can be to a customer that's unique and authentic. And if I can't do that, I don't want the business or the community.
I'm curious, because you talk again about the exit and then the reentry. What caused you to get back into automotive? Like, why not take and I'm going to be crowd. Why not take the pile of money, go sit on a beach and enjoy the good life, whatever that means, right?
Fair enough. So I did not come from the car business. I came from heavy industry and other industries. And so when I sold, you can do all these formulas and do a pie chart and look at the benefits and the upsides and downsides and debt elimination and security. And then what you underestimate when you do all that stuff is your love for the business. And so I forgot that in the process. And that is specifically why I'm getting back in, because I love it and want to be involved in it and want to bring that passion and love to the communities and customers and manufacturers with whom I do business.
Yeah. So you've been pretty public in saying that the public groups overpay for stores, particularly for luxury stores, and that does impact their ability to provide a return to Wall Street. Talk to us a little bit about your thought on that, and then where that gives you an opportunity as the public's, as you say, overpay.
Fair. I want to be careful, not politically correct, but careful with overpay. I would say they have the ability, and I respect it because they're public, to say to Wall Street, which is to whom they are accountable, that, hey, we're growing revenues and therefore our share price should be more. And I think that Wall Street specifically forgets that this is or they've forgotten that this is a cyclical industry and goes up and down. And it's impossible to build a business like that long term and not have a major correction. Again, look at the share price of the publics in 2008 when they did that. If you look at, I think, what Penske and Asbury and AutoNation are doing, specifically, not leaving anybody out, I think they're a little bit more conservative in their approach, and they're looking at things long term. And so I just think for a private, we have to look at things differently. Either immediate return on invested capital immediately, or are you in it because you feel like you can add value and enjoy it, and therefore because of that you'll actually have success. And that's what I did before. I didn't have a business plan based on Wall Street returns. It was because I wanted to go in communities and do things that the publics weren't doing. And when I started in Houston, Texas, the other 2 Porsche stores were owned by a public, and we were third. And when we got done, we were by far number 1 and the fastest growing store in the country in Porsche. And that was because we did exactly what the publics couldn't do, and that real connectivity to the customer.
Yeah. And I do agree with that. Like, it's tougher the larger you become to connect individually, and you've got to redouble your focus. And sometimes you can see the stock price, by the way, for all the different publics on the ticker tape down below. But in answering to Wall Street, sometimes that becomes, a backseat concern. You mentioned bubble. Do you think there's a bubble in valuations building up at the footstool of some of the public money?
I'm nervous with the word bubble, but I hear you.
It was your word. It was your word.
No, I respect. I'm nervous with it because I don't ever want to be a predictor of economic or economic that. But I think, look, and I've said this before, it's no secret. 2008 is really the last recession we had. Yeah. That's what is that? 16 years ago, 17. I don't know my math. 17 years ago. Basically, we should have an auto correction every 10 years. I'm not pontificating, or do I want that to happen? Absolutely not. I just think that it's important to have cash reserves. It's important to be careful and disciplined. Purchasing discipline is critical. And at the same time, if there is a strategic reason for public or private group to buy a store because it's in the market, or it's the store that they want because it's a brand they don't have, or I'm all for it, as long as the cash that you have or the liquidity you have is going to be able to sustain that and you make it through the process. So bubble, never want to predict or be negative. I would say I'm cautious and a little nervous about things have been good for a long time. It's not a surprise that things could slow down.
Yeah.
And where you are with a little bit of cash on the sidelines, dry gunpowder, as you say, like anybody that has that, to your point, could capitalize on any type of
deals are made
when it happens, right? So
I believe that's how I was raised.
So what's your advice as we wrap here? What's your advice to the next generation of luxury dealers who want to compete against those larger groups, publics, who are so well capitalized without losing the, quote, soul of their business and want to preserve and maintain and grow that customer experience?
Exactly what you said. Don't worry about competing. Be yourself. Run your own race. Don't try to be everything to everybody. If you really love your customer and your community and you're passionate about the brands you represent and you want to honor those brands, that's what you should focus on. Don't worry about the publics, because you're not going to be able to compete with Wall Street money until Wall Street money dries up, and Wall Street money dries up when the stocks get hit.
Yeah. So we'll stay tuned to see if that happens, but a fascinating argument. We wish you all the best in Flagstaff. It'd be fun to come out at some point, see your operation and get to, but we appreciate you sharing your story with us here on the show today. Todd Blue, CEO of LAPIS. Thanks for joining.
Thanks so much.
Thanks, Todd.
That is, it's interesting. In automotive, this gets in your blood and it's tough to get out. And I hear story after story after story of people who could go do something else, could retire, could cash in the chips. And it's just like, it's such a fun industry with so much potential. And it's simple, but not easy. But the opportunity just pulls us all back in. And what a great franchise he has there in Mercedes-Benz. Let's talk Lotlinx.
Beautiful.
Yuli. With Lotlinx, dealers win with every VIN. The AI-powered platform uses the most robust VIN and shopper data to help optimize every vehicle and protect profit. Take control of your inventory today at Lotlinx.com. And for everybody on the live stream, you can click the QR code to my side there to get more information. If you're listening to the podcast that pushes out daily, you can go to the show notes to learn more about Lotlinx. Whatever the case, wherever you are, we say thanks for being here. And thanks to Lotlinx for supporting the content on today's show, including that very cool interview with Todd Blue, Mercedes-Benz Flagstaff, Arizona. So thanks, Lotlinx. All right, Yuli, we're going to jump right up next. Chris Singleton is managing partner at Mike Terry Automotive Group. Chris, welcome to the show.
Hello, thank you guys for having me.
Thanks for being here. We appreciate you. We appreciate you joining the show. How's biz? And as part of it, tell us a little bit about yourself.
Yeah, so business has been good. Obviously you get to being a dealer because you always want more, but business has been really, really good. Similar to Todd there, I'm in a very small town. My story, I guess, to give a brief synopsis, was I seen an ad in the paper. I came from selling Kirby vacuum cleaners and Cutco kitchen knives door to door.
That's cool. Glengarry Glen Ross.
Yes, for sure. So started doing that, and then I seen an ad in the paper that you can make, $2,000 to $10,000 a month. And as a teenager, 17, 18-year-old kid, I was like, man, this will be life changing. So I got in the car business then and worked my way up from the bottom. I always had a dream of making it to top 40 under 40, which just recently happened, and owning a store one day, which I now have as well, along with my business partner. So yeah, super exciting times.
All right, so we want to talk the ownership of the store. First, tell us where you are. What city, state are you in, Chris?
I'm in a small town about an hour outside of Corpus Christi called Refugio, Texas.
Very cool. Lauren Klein puts in something I agree with. Cutco Cutlery, best college gig. So my brother sold Kirby vacuums for a while, so I get that deal. And the knives, that is real sales, right? You're knocking on someone's door, asking them to buy something they have no interest in and no desire to do. And that's
opening
the
that
purest.
skin.
Yeah.
Mm-hmm.
Yeah. I think especially as a young kid, as going into the neighborhoods that I was going into, especially as a young African-American man, in the middle of the evening, closer to the night, saying, hey, can you let me in your house with a bunch of knives? And to me, if you can sell that, you can sell anything. So it was, I think I really cut my teeth in sales there for sure.
What was your ability that allowed you to get in that house? To your point, you set it up interestingly, right? You said, hey, you got invited into someone's home with knives. What was your talent, skill, ability that you used that helped you get that invite and be successful in that gig?
I think one of the biggest keys is you have to be able to develop rapport instantaneously. And before I knew the psychological terms of it, I knew how to gauge from someone's body language what would make them feel comfortable. I knew how to make myself smaller in a sense, or less invasive to their territory. So I usually stood a little bit further off from the door. I smiled, I waved. I did a lot of things to make myself seem less scary, if you will, prior to getting to my knife demonstration. So it was fun for sure.
All right, let's come back to the dealership. I do want to ask about a quote you gave us in the green room. We'll come to that in just a second about trauma in life and how it can sometimes be a breeding ground for success. But in your role as managing partner there at Mike Terry Auto Group, what's the single most important KPI that you look at every single morning that drives your day in fixed ops? And why is that?
Okay. In fixed ops, one of the key metrics that I think is often overlooked is my additional service recommendations. And the reason why is because oftentimes people will monitor closing ratio. They will monitor how many lines that you're selling per RO. And I believe in addressing the root cause of things. You can't present anything that wasn't recommended. Obviously, you want to upsell based upon time and mileage, when a customer pulls on the drive. But if you aren't tracking your technicians on their additional service recommendations, that's what's going to tailor the presentation of whatever RO. So making sure that the technicians are recommending is imperative before you can see if your advisors are selling.
So, Chris, what technology are you using to generate that KPI on a regular basis? Is there a particular program or tool that you're using, a vendor?
Yes. So I'm using Xtime. One of my favorite things about Xtime, they can give me a discount on my bill for the free advertising here. But one of my favorite things about Xtime is that there's something called a media utilization report. So I can track how many repair orders have media attached to them, via a picture or a video. Because there's one thing they say that selling is not telling. So one of the things that I can do is I can track and make sure that we aren't just telling our customer, hey, you need a new fuel pump or you need this. We're being able to show you via video, this is what it looks like under the carriage of your car. This is what your cabin air filter looks like. This is what some things that need to be changed. And I think that that's been instrumental in our growth.
So do you have a percentage standard or expectation of the ROs? What percent include that media attached to it?
Absolutely. 90%.
90%.
And that's giving you about 10% leeway. In my opinion, it should be 95 plus percent. The only people who shouldn't maybe receive that is that if it's just an oil change and a air filter and the car has 5,000 miles, and you can walk the air filter out there and show the customer. But outside of that, I think it should be analogous with your inspection rate.
So when you have that media and when you're tracking that KPI, are you able to quantify the result back to fixed ops profitability, or how do you quantify that? How do you think about, hey, this is important, I'm going to insist this happens, here's the financial benefit on the other side?
Absolutely. So it's a very simple process. Everybody's kind of a what's in it for me. So I will show my advisors and I track what my average ticket with media attached and my average RO without media attached, and look at the difference between my average RO that has attachments versus not. And that difference within itself is usually substantial enough to where everyone in the department sees the benefits of it.
Chris, so I love this, and I want to talk absorption and what you see as a target for absorption. You're very fixed. You're very focused on fixed, which, by the way, we're getting an early jump on Fixed Ops Friday this week. We'll have more Fixed Ops content. It's unusual to have a managing partner that is so involved in Fixed Ops, so props to you. But you've been holding out on us. You're an author. The Marion Kane put in and said, Chris's book is amazing. Tell us, what's your book?
So my book is called All is Fair in Love and Sales. And simply, it was just because the premise of the book, The 5 Love Languages, is because we oftentimes love people the way that we ourselves want to be loved. To me, sales is analogous from that perspective, because oftentimes we sell to people the way that we want to be sold to, not how our consumer wants to buy. So it's all about understanding, whether you're in a personal relationship, a business relationship, or in business, you want to understand your consumer and sell to them the way that they want to be sold to, not how you want to buy. So that was kind of the premise of it. Okay. So our conversation here is super interesting. We're having a little bit of a challenge with your audio. So to our listening audience, we're going to monitor this. We're going to stick with you as long as we possibly can, because I'm curious your answers on this. What is a realistic target for service absorption today? And what are some of the biggest levers you're using? You told us the KPI you're looking at. You told us the benchmark. You're generating the videos. It's seeing an increase. What's your target absorption, and what levers most quickly impact that? So fixed absorption, I would say that 80% is a viable target. Okay. And you have to be able to obtain that from two aspects. The only two ways that you can do that is via expense control, and being able to increase not just the gross profit of your fixed ops department, but also the net profit of your fixed ops department. So the biggest levers that I would say that are important is some of these things are so simple. One of the biggest things that I've done when I came to this dealership was I done a market survey. Small towns, small areas are sleepy. So it may mean that they haven't made some adjustments and some changes to things like their door rate in a substantial amount of time. There was about $30 to $40 per hour in our door rate, and changing that immediately just to be in line with the other dealerships in the area. That was one of the things that gave us a really big boost. Tracking upsells on the drive, making sure that people are upselling based upon time and mileage. There's something called the consistency principle. It's easier to close people or to convince people of something when they hear it multiple times. So if your advisors suggest something based upon time and mileage, and then the technician also recommends that same thing, then now you just increase your opportunity to actually get a yes. And the other thing I would say, the third KPI is tech proficiency. Are you monitoring how many hours your guys are clocking versus how many hours that they're flagging? And not just your flag technicians, but also even your hourly guys. Because what could happen is that the hourly guys could just say, well, I'm getting paid the same anyway. So now you got these hourly guys that may do a 4 or 5 hour job, and they may give that to the flag technicians. And now you're paying flag hours to a flag technician who didn't do the job, and you're paying your hourly rate. So tracking all of those things that many people wouldn't look at.
And where are you pulling that report from? Just for everybody, through a dealer principal who may be listening, saying, I'm not sure where to go for that.
That's a Google sheet that we have that I look at every day, that I have my service that I have my service manager put together for me.
Yeah, that is very cool. All right, so let's pop out of fixed ops for a second, because I want to learn a little bit about how you became a dealer. You went from Cutco knives and vacuums to you're a dealer principal. Who gave you that shot? How did you say, hey, I want to do this? And then what did the economics look like?
Well, it was definitely a journey for sure. When I got into the business, I would see the guys in the fancy suits and the nice cars. And I said, hey, one day I want to do that. So I worked in virtually every single department in the industry, starting from, I washed cars very briefly, and then got into selling, then finance, then manager. And finally, after learning the things that I needed to learn into the business, I met Mike Terry at NAMAD. I met him at an automotive conference. One of the things that stood out to me about him was that he had a very adroit accounting knowledge. And I'm a big nerd, so anybody that has some knowledge that I really want to acquire or that I want to get better at, I just kind of linked myself with him. And we had a few conversations, because I owned a sales training company for a bit, and he had expanded really rapidly. So we talked about creating some infrastructure and some processes within the totality of his organization. So in that conversation, he said, man, you ought to come on and be the COO and help me to grow my organization. So, and then we developed a plan, because my ultimate objective was to be a dealer. So we developed a plan of me coming there, helping to grow his dealer group, and then having an opportunity to buy into a dealership. So it was a little bit of a less than traditional path.
So for those that are saying, hey, I would love to become a dealer, what was the dollar amount you had to put in to become a partner? And is it equity in the operating? Is it real estate? Is it the whole thing?
Well, I can't get too deep into the
and that's fair, but we got to ask.
I love that you guys asked that question. So I can't get too deep into my business or Mike's business. But what I will encourage all aspiring dealers is to save, and save substantially. If I knew then what I knew now, then I would have done some things differently. So I would say to save your money for sure, and depending on the percentage that you're buying into, then that'll vary in the amount that you have to get. So
If you have someone looking to become a managing partner or a partner with equity, is there anything you would give as advice to avoid? Like, are there pitfalls as you've learned lessons where you would say, hey, make sure you don't partner with somebody that does this or that or whatever?
Yeah, I would say to understand true assets of a dealership. One of the biggest things is to understand what your true networking capital is. That is the amount of money that the manufacturer says that you have to have in the business bank account. And understand that if that dips, either because you've sold a bunch of cars and the manufacturer says, well, now you have to keep this amount of money in your business operating account. Understand that whatever your percentage is, you have to contribute according to your percentage. And that's what you have to add to the networking capital. So one, it's important to have real assets in there. So understand, what are my obsolescent parts? So that's really going to be sold at 25%. So that's a less of an asset. And understand a business's uncollectible receivables. So oftentimes on a financial statement, it'll have the receivables on there, and that goes into your assets. Some of these things may be old EBE, money that you're not actually getting in, and you've paid for your percentage of these uncollectible assets, which is essentially false money. So understand the true finances of a dealership. What real assets do we have? What real liabilities that we have via obsolescence parts, cars that are overfloored, and true money in the bank that we're actually receiving, and then make an educated decision from there as to what your share price should be.
All right. So as we get to wrapping here today, and again, we appreciate all the perspectives you've given. You've given us great nuggets in fixed ops, overall business operations, what it takes to become a partner, a managing partner. You mentioned something in the green room that I found fascinating. So I'd love to know more about it. You talked about trauma in life and how it can set the path for success. A lot of people look at trauma and they're like, hey, it's a disadvantage. What the heck did you mean? I'm fascinated by it. Take us down that road for a minute, if you don't mind.
Sure. So there's a quote that says, much trauma is born from, or much success is born from trauma. I'll just use myself as a personal example. When you grow up from really humble beginnings, you may have experienced abandonment from parents. You don't feel good enough. And so a lot of times in sales, it's about that instant gratification. I'm going to prove to my parents, I'm going to prove to whoever didn't believe in me, I have this chip on my shoulder, and I'm going to prove to them that I'm worth something. Now, there's an aphorism that says, what gets you here won't get you there. Yeah. So that may be good for performance. It may motivate you. But when you get into executive leadership and you want to really align yourself with your team, harden yourself with them, you have to be able to transition from this kid who had a chip on his shoulder, who's just all about accomplishment, to
how do you do that? How do you transition?
I would say that it's self-mastery. So understanding where your motivation truly comes from, therapy, counseling, reading books, part of a pillar of emotional intelligence. Accountability, absolutely. A pillar of emotional intelligence is self-awareness as well as social awareness. So taking a real inventory of how you're impacting others, I think is a very humbling experience, but it actually helps you to see where your motivation comes from and being able to transition from that.
So did you do an inventory like that with your team there? And what were your big takeaways as you did that? And why did you do that? Like, what caused you to become, I guess, self-aware? Was there an event that happened in your life where you're like, hey, it got me so far and now I need to get to that next level?
There were many conversations, even conversations that I had with Mike, and I'm sure some of the listeners can identify with this. Mike, and even some of the other conversations that I had, I used to be very overt in my displays of grandeur. So my first, I drove a red Bentley with a red suit to match. I had, I always had to wear every pair of jewelry, every piece of jewelry that I had. And Mike was one of the guys who really asked me why, where did that come from, along with other people. And I always just said, oh, this is just me. I like how this feels and all. But through therapy, counseling, and even some of the other questions, the truth is I didn't feel like I really belonged in the room. So in not feeling like I belonged in the room, I had to overtly display some of the things that I had in order to try to prove to myself that I belonged here. I belonged being a dealer. I belonged, some of the council that I'm on, all of that. So really getting to the root of that and not being afraid to look into the mirror and make some adjustments. So now I'm much calmer, and I realize that the reality is I suffered from imposter syndrome. I didn't feel like I really belonged in the room. So I became grounded, therapy, counseling, reading, and it affected how I dealt with my team. How much more empathy are you able to have? Listen to others, make space for other people in your mind and in your heart when you're not super consumed with yourself and trying to prove to yourself that you're worth something. So it's one of the biggest transitions.
It's so strong. And, part of these things that happen in our youth, right? We play to our strengths, but it's so much more impactful to embrace those. And I don't even want to call them weaknesses, but to be aware of those weaknesses and then turning them into superpowers, because anyone can be good at the things they're good at. It's how do we get better at the things that I'm lacking in? That's so important.
But it is interesting. You didn't prove everyone wrong. You didn't take your chip on the shoulder and say, "Hey, I'm going to show you all," because you can't do that as a leader, as a executive manager of a store. You can't do everything on your own. You became self-aware, took an inventory, and then you found ways to better connect with your employees to help them achieve and accomplish their own thing. Like, was that a big revelation for you? And this business is complex. You can't prove everyone wrong. You've got to work with everyone, right? Like,
no, absolutely. One of the biggest things is in Daniel Goldman's book, Emotional Intelligence 2.0, he talks about how vulnerability is the opposite of ego. So connecting with your team, connecting with people in general is more about understanding what some of your areas of opportunity are, being vulnerable with your team and your mentors and yourself, and being able to admit things. You can't fix a problem that you don't realize is there. So as a leader, we're always taught, oh, you have to have the answers, you have to have everything figured out, but be vulnerable with your team. And now you guys align yourself with the problem. And the law of reciprocity says the more vulnerable you are with them, the more vulnerable they'll be with you in return. And it helps you to really build a relationship. And now you create an environment where it's okay to be wrong, to get something wrong, to be scared, to have fear, to have all of these emotions. And now everybody can kind of band together and help each other, lift each other up.
Given your background, Chris, is there anything you have to do on a regular basis, and what is it, if there is, to kind of keep you in check on that, so you don't kind of return to that old, I'm going to prove you wrong world, but rather I'm connecting, collaborating, being vulnerable?
Yes. Yeah. There's a few grounding practices that I have. One of them is affirmations. So on my affirmation list, I have a few things surrounding vulnerability. I have some things surrounding making sure that I always am operating from a space of leadership is really about servant leadership. It's really about putting other people ahead of yourself. And I ask myself the place that I'm coming from. So even if you're giving to someone, there's a type of narcissism called altruistic narcissism. So it's like the people they give to the homeless people on the street, but they're recording the whole time. So you're doing something nice. You're doing something kind. Yeah, they want to be seen. So asking yourself, what place does this come from? Whether I'm giving or I'm doing something positive, what place is this coming from? And being honest with yourself, I think that's one of the biggest things you can do to constantly keep yourself in check.
Yeah. Well, absolutely appreciate you coming on the show to share perspectives. Name of the book again, one last time. I'm going to go get it. I want to check it out.
All is fair in love and sales.
That's awesome. Chris Singleton, managing partner, Mike Terry Auto Group. Thanks for coming on the show to share so many perspectives on all things fixed ops, leadership, vulnerability, and acquisitions. And congratulations on that dealership. And we wish you all the luck with Chevy now and down the road. Thanks, Mike. Chris.
Yes, sir. Thank you all.
Bye-bye. That's a fun conversation. When he said that in the green room, he's like, look, trauma could be how did he say that? You were there. The fuel for success ultimately
it can come from trauma. Right. Yeah. I'm paraphrasing badly, but
and it's interesting because like in automotive, I think there's no limit to what we can achieve and accomplish. And in so many ways, so many of us are, it's the island of misfit toys in a lot of ways, right? Like everybody comes from different backgrounds, different strengths. And regardless of that background and strength, if you're willing to work hard, the sky is the limit. And
Yeah.
he's proof of that. And so many others are proof of it.
The sky's the limit was my email signature at my last group for a very long time.
Okay.
Every time we broke another record, it was the sky's the limit. But to push that a step further, the only limitation is the limitations we impose upon ourselves.
Ooh, true.
So, he said that trauma can be the catalyst, and he's so right. But trauma can also be the excuse. So life will always give you the opportunity. An opportunity does not guarantee success. The opportunity just gives you that fork in the road, right? And what do you do with it? Did it happen for you? And are you going to be the author? Or are you going to be the victim of circumstance and fold?
Yeah. Kim Seaton says Kirby ! Reinforcing his background in the
They're
knives
great
and
vacuums, by the way. I
Yes,
remember my parents had one. So
yes. And then Marion Kane, who's been on the show before, says this is a heavy conversation.
Yes.
And yes, here at the Daily Dealer Live, we go where no one else is comfortable going. We ask all the questions, including cost to get in, because you know what? A lot of times people are willing to talk about it, comfortable to talk about those things. If you're not, you can decline and move on. But we have the conversations no one else in automotive is willing to have. So pretty cool show today, I thought.
Show.
So,
and great show.
You know what? We're only halfway through the week. It's Wednesday. We're back again Friday. And to our Daily Dealer Live audience, thank you for watching today's Daily Dealer Live, where we break down the biggest moves in the car business as they happen. We'll see if the producers are ready for this. Don't forget, we're here live every Monday, Wednesday, and Friday. So if this is your world, hit like, subscribe, turn on those notifications so you never, ever, ever miss a beat. And to everybody out there, to our loyal listening audience, thanks for being here, and we'll see you next episode on Friday.
We'll see you guys.